Imagine a single car model selling more units in 1 year than the entire lineup of some of the world's biggest automakers. Now imagine that car isn't a futuristic Tesla or a luxury Mercedes, but a boxy, almost toy-like hatchback you've probably never heard of, unless you live in Japan. This unassuming vehicle isn't just a symbol of urban practicality, it's the frontline soldier of a massive economic battleground. And now, China's most aggressive automaker, BYD, is gearing up to invade this fiercely protected territory with an electric weapon that could rewrite the rules of the global auto industry. So, what happens when the world's most relentless EV manufacturer storms the fortress of Japan's legendary K-car market? Could this be the moment affordable electric cars tip the balance, not just in Japan, but across the planet? To answer that, let's pull back the curtain on a $30 billion secret: K-cars. These compact machines are the backbone of Japanese city life. Standing at just 3.4 meters long, with engines no bigger than your morning coffee, 660 cubic centimeters, they dodge Tokyo's traffic with ease, slip into impossibly tight parking spaces, and crucially, cost less than most e-bikes in the West. Japanese buyers adore them, with over a third of all new cars sold each year falling into this quirky category. But what's truly remarkable about K-cars isn't just their size or price, it's their social and cultural clout. K-cars mean freedom for a generation of young Japanese drivers on strict budgets. They are the cars of the people, affordable, practical, and, most importantly, proudly made by Japanese brands like Honda, Suzuki, Nissan, and Daihatsu. The Honda N-Box, for example, has become a national icon, topping sales charts year after year. In 2024 alone, it sold over 200,000 units, outselling even the legendary Toyota Corolla in its own homeland. This makes the market both lucrative and fiercely guarded. Enter BYD, China's homegrown electric vehicle phenom. BYD isn't just a car company, it's an industrial juggernaut. The brand churns out new models at a dizzying pace, blitzing into markets from Southeast Asia to Europe with shockingly affordable EVs. Its ethos is summed up by one word: scale. While Toyota, Honda, and Nissan have cautiously tiptoed into electric vehicles, BYD has gone full throttle, betting its future on batteries and electrification. The numbers are staggering. In 2023, BYD sold over 3 million plug-in cars worldwide, more than the entire output of Ford or Mercedes. Its bestseller, the Seagull electric hatchback, retails in China for about $11,000, less than the average cost of a used car in most Western countries. For Japanese buyers, this pricing is disruptive, almost unthinkable. But even with all this firepower, BYD's Japanese sales have barely made a dent so far. In 2024, BYD managed to deliver just over 2,200 vehicles in Japan, a modest sum compared to the Honda N-Box. And yet, it still outsold Toyota in the pure EV segment. Yes, in Toyota's own backyard. It's a foot in the door, and now BYD wants to kick that door wide open. The secret weapon? A brand new right-hand drive hatchback recently spotted under heavy camouflage at a BYD test facility. From the spy photos leaked online, it's clear. This isn't just another electric car. It closely resembles Japan's beloved K-car formula. Short, boxy, practical, but with the unmistakable BYD touch. A central touchscreen, futuristic interior, and of course, pure electric power. Why focus on K-cars? Because as one analyst at CLSA, Christopher Richter, notes, if BYD can crack the K market, they don't just disrupt Japan, they change the playbook for affordable EVs worldwide. But to even stand a chance, BYD has to overcome an enormous wall of barriers. The Japanese K-car ecosystem isn't just about engineering, it's about culture, politics, and trust. It's about roots that run generations deep. Key cars emerged after World War II, designed to put Japan on wheels when resources were scarce and cities rebuilt from rubble. The government offered generous tax breaks, lower insurance, and reduced parking requirements for these microcars, a lifeline for millions. Over the decades, the K-car became a rite of passage for young drivers and suburban families alike. Today, the average new K-car sells for between $6,500 and $13,000. That's before government subsidies for new energy vehicles, which can shave another $4,200 off the sticker price for EVs in Japan. Manufacturers like Nissan and Mitsubishi have already begun to electrify their K lineups. Take the Nissan Sakura and the Mitsubishi EK-X EV. Both offer respectable 180 kilometers of range on a small 20 kilowatt-hour battery. They're city cruisers, not road trip warriors, but for urban Japan, that's more than enough. So, if BYD wants in, it needs to hit a price, a form factor, and a cultural note that's more than just competitive. It needs to be irresistible. And here's the twist. The smallest electric BYD currently sells, the Seagull, is about 3.78 meters long, almost 40 centimeters too big for the K regulations. The new camouflaged prototype? It's rumored to finally fit within the 3.4-meter K car limit, signaling a deliberate, strategic strike into this last bastion of Japanese automaking. But size isn't everything. Japan's car buyers are fiercely loyal. According to Hans Greimel, senior correspondent at Automotive News, Japanese consumers trust domestic brands. It's not just about specs or price, it's about a shared identity. Foreign brands are seen as outsiders, and that's a very hard wall to scale. This isn't just anecdotal. Even giants like Volkswagen and Ford have struggled, and often failed, to make meaningful inroads here. Cultural taste plays a huge role too. K-cars are designed with an eye for the whimsical. Their cute, friendly faces turn heads and spark nostalgia. Any foreign entrant must respect the heritage and unique automotive culture embodied by K-cars, warns Masaki Oshikoshi of the Japan Automotive Hall of Fame. A car that looks too alien, too aggressive, or simply out of sync with Japanese preferences is destined to flop. Then, there's the regulatory maze. The 660cc engine limit and 3.4-meter length aren't negotiable. Cars also need to clear strict safety, emissions, and recycling requirements. For an outsider, Japan's regulatory landscape can feel like a gnarled forest, each branch a new rule to navigate. On top of that, it's not just about selling a car, but about after-sales service, financing, and a dealer network built on relationships. Japanese buyers expect absolute reliability and a personal touch, notes Nakanishi Takaki, a leading Japanese automotive analyst. If your service lags or you can't provide the trust factor, you're out. Let's not forget the government's role. While Japan has offered healthy subsidies for EV adoption, there's an undercurrent of protectionism, policies designed, subtly or overtly, to favor homegrown champions. The threat of trade friction is ever present. A sudden influx of ultra-cheap Chinese EVs could trigger not just a price war, but a political backlash. And yet, BYD possesses a card that no Japanese manufacturer can match: sheer cost efficiency. Thanks to massive production scale, integrated battery supply, and relentless optimization, BYD can build electric cars for thousands less per unit than rivals. As Bill Russo of Automobility Limited puts it, BYD isn't just challenging Japan, it's challenging the whole status quo of how affordable cars are made and distributed. Still, the technical challenge remains. Will BYD's battery tech offer enough range at K-car prices? Can it deliver on reliability and safety demanded by Japanese buyers, who are famously unforgiving of recalls, glitches, or shoddy workmanship? Some see a path through collaboration. BYD could partner with a domestic giant, leveraging Japanese trust while injecting their low-cost EV tech. Others expect a standalone launch, risking everything on brand power alone. The stakes are high, for BYD, for Japanese automakers, and for global EV adoption. If BYD pulls this off, it could force every legacy company to rethink their strategy, not just in Japan, but in every price-sensitive market worldwide. But here's the burning question. Is BYD's relentless push enough to shatter decades of tradition and brand loyalty? Or will Japan's economic and cultural immune system reject this foreign invader, keeping the K-car kingdom sealed to outsiders? As BYD's camouflaged prototype quietly cruises the test tracks, the world is watching. Will this be a revolution or a spectacular failure? And that leads us to our next act. What exactly stands in BYD's way as it attempts the most audacious market entry in recent automotive history? Are the obstacles, both seen and unseen, simply too great for any outsider, no matter how deep their pockets? Or is the irresistible force of progress about to meet the immovable object of tradition? Let's fast forward to the possible futures that could unfold if BYD follows through and launches an electric K-car in Japan. Is the market about to witness a seismic shift, or will it cling tight to its traditions and keep outsiders at bay? The consequences of this battle reach far beyond city streets and dealership lots. Imagine for a moment BYD succeeds, cracking the code of Japanese consumer hearts and regulatory mazes. The arrival of the first affordable, high-quality Chinese-made electric K-car could send shockwaves through the entire industry. Price-sensitive younger buyers might embrace it, lured by modern features, style, and reduced running costs, especially if generous government EV subsidies are in play. At a price point as low as $10,000, or even less if subsidies kick in, this could redraw the boundary between what's possible and what's profitable in city cars. If BYD's cost-competitive manufacturing really applies to Japan, as analyst Christopher Richter predicts, traditional Japanese automakers may find themselves in an uncomfortable position. They'd be facing a new class of competition that doesn't just play the game differently, it rewrites the rules. The potential for disruption here is bigger than people realize. If BYD succeeds in Japan, every automaker in the world is going to rethink their EV plans, warns Bill Russo, CEO of Automobility Limited. On the other hand, the script could flip. What if the deep cultural affinity for homegrown brands stands firm? Hans Greimel of Automotive News reminds us, Japanese car buyers don't just see cars as appliances, they see them as part of their national identity. In this reality, BYD's new model enters the stage but faces a suspicious audience. Sales stagnate, local rivals respond with better EVs or aggressive pricing, and talk of a Chinese revolution fizzles out quietly. Then there's a third path, collaboration. BYD, recognizing the ironclad loyalty Japanese buyers have for local brands, might forge a partnership with a domestic automaker. Imagine a jointly developed KEV, Chinese tech, Japanese badge. This hybrid approach could neutralize resistance and accelerate the shift to electric K cars while preserving the cultural essence that buyers expect. But none of these routes are smooth. Each brings risks and rewards. For BYD, the opportunity is huge. Japan's K car segment is an untapped goldmine for EVs, given its more than 30% share of all automobile sales, millions of cars annually, and almost all gas-powered so far. If BYD cracks this market, it could set a precedent for other protected, tradition-bound markets worldwide. Their experiment in Japan could become the blueprint for EV disruption from Bangkok to Berlin. Yet with great reward comes substantial risk. Regulatory obstacles loom larger than they appear from outside. K-car requirements, in length, width, power output, are laser precise. BYD's existing models, like the Seagull, are too long for Japan. Engineering a new car, building supply chains, and securing after-sales service across islands is costly and time-consuming. One misstep could make the venture unviable. And don't underestimate the power of perception. Any hint that a new BYD KEV is less durable or safe than established rivals could trigger a swift consumer backlash. Likewise, political tensions, such as debates around Chinese investment or calls for protectionist policies, could throw regulatory curveballs. If the Japanese government tightens the screws or increases requirements for foreign automakers, BYD could be forced out before it even makes a dent. There's also the potential global domino effect. If BYD's K-car finds acceptance in Japan, it could open the gates to other right-hand drive, city-centric markets. Think the UK, India, or Southeast Asia. Electric city cars could become the new entry point for affordable urban mobility across continents. Let's pause and synthesize. What can you, the viewer, take away from this brewing contest? First, it's a masterclass in how technology and tradition collide. Newcomers, even giant ones like BYD, must do more than bring a cheaper product. They must understand local culture, needs, and anxieties. As Masaki Oshikoshi from the Japan Automotive Hall of Fame puts it, you don't just sell a car in Japan, you join a living tradition. Respect that, or you won't last. So, if you're an industry watcher, investor, or just fascinated by the future of mobility, keep your eyes on this matchup. If BYD overcomes the odds, it signals a larger opening for Chinese EVs and a push for affordability and sustainability worldwide. It also means that established giants, Toyota, Honda, Suzuki, will have to step up their own EV efforts, potentially leading to faster innovation and better choices for everyone. For Japanese consumers, the news is equally loaded. The promise of affordable, practical, and eco-friendly city cars could become reality sooner than expected. This is especially relevant in regions where public transport is scarce and owning a car is essential. Lower upfront costs and government subsidies could make EVs accessible to a wider swath of the population. For the rest of us, the ripple effects could mean a new generation of sub-$15,000 EVs in cities around the world, an answer to the persistent problem of how to make green mobility mainstream, not just a luxury for the few. But there's a crucial lesson for everyone. Disruption doesn't always mean destruction. Sometimes it means collaboration, adaptation, and mutual growth. If Japanese automakers and BYD end up working together, pooling expertise in engineering, supply chains, and market knowledge, we could see the birth of city cars that set new global standards for efficiency and design. So, what's our final answer to the big question? Can BYD truly disrupt the Japanese K-car market, or will it crash against the walls of tradition and regulation? The truth, at least right now, is that the outcome remains a thrilling uncertainty. If history teaches us anything, it's that the Japanese market is fiercely protective, but not invincible. Only those who adapt, respect tradition, and relentlessly innovate can win a lasting place. Remember how decades ago Sony and Toyota were underestimated overseas, only to redefine their industries? The difference now is the direction. This time the challenger is from across the East China Sea, not across the Pacific. Current expert sentiment sits on a knife edge. Colin McCarricker of Bloomberg Neff offers a closing thought. Japan has always valued practicality and quality. If BYD can deliver those at a disruptive price, even the most loyal customers might rethink their choices. But don't expect overnight fireworks. Early attempts will almost certainly meet skepticism and slow uptake. It might take years for BYD or any foreign brand to achieve real traction. But each step is a signal to automakers, policymakers, and most of all, to car buyers. And here's a secret fact you probably didn't know. The first ever K car, the 1949 Suzuki Suzu-Lite, was itself inspired by foreign designs. Japanese automakers took global ideas and made them uniquely their own. History, in a twist, might be repeating itself, this time with a new electric heartbeat. So while the jury's still out, one thing is certain. The next chapter in city cars is being written right now, and it might surprise us all. Will Japan's cherished K tradition embrace the electric age with some Chinese help, or will it double down on homegrown pride? Only time and the savvy moves of companies like BYD will tell. If you found this exploration of automotive strategy and cultural clash fascinating, be sure to subscribe for more behind-the-scenes looks at the global car industry. Leave a comment and tell us, would you trust a Chinese EV over a Japanese one? What features would win you over? And if you want us to dive deeper into the secrets of Japanese automotive culture or the rise of Chinese tech giants, let us know below. Thanks for watching, and remember, in the world